We're here today joined by NobleOak CEO Anthony Brown to answer some questions about the subject of preparing for the unexpected with life insurance. Thanks for coming today, Anthony.
Great to be here, Josh.
Firstly, there are three main ways of purchasing life insurance: through your super, by talking to an advisor, or directly through an insurer. Interestingly, according to a recent report by Rice Warner, 30-year-old parents would need cover 8 times greater than their household income to adequately cover their needs. Yet the median cover level for life insurance in Australia is currently only twice the median household income. I think this highlights the fact that people are often aware of the need for adequate cover when it comes to insurances they use now, including car and home, but life insurance can be easily overlooked and seen as tomorrow's concern. So life insurance undoubtedly can be a complex area, and that's certainly what Sarah, who's written into us, has expressed. She's going through the process at the moment of looking at life insurance and asks us how can she try and make more sense of the product disclosure statement, or PDS. So Anthony, why don't you kick off with telling us a little bit about what people can expect to see in the PDS?
It's a great question, Josh, and I think any of us who have looked at PDSs before can understand Sarah's issues. They're very technical documents. With life insurance, one really important factor is just to find out whether it's a fully underwritten direct product or a PEC product. And fully underwritten just means they ask you a lot more questions up front when you're applying for the cover. They might ask for medical records and even do blood tests and tailor the product really well for you individually. And when you take the product out, they even confirm the terms and conditions, so you know exactly what you're getting with the product. Okay. It provides more certainty at claim time for you. The second product, called PEC, that's short for pre-existing condition exclusions. What that means is it is a bit of a mouthful, but it means that if you have a pre-existing medical condition, your claim may not be paid out if it was in relation to that condition. So there is a bit more risk associated for the person that takes it out. They are easier to access though. Generally you can buy them online, you only ask a few questions, they're quite affordable products. So there is a need in the market for PEC style products as well.
So I guess it's like a PEC's product is one size fits all, whereas an underwritten product is something that's much more tailored to the individual. Is that then reflected in the price as well?
Absolutely, it's a great question, because a lot of people assume that PEC products cost a bit less because you buy them quickly online. But the reality is the insurer has to manage their risk, and if there's a lot of people involved and they haven't asked many questions, they generally have to increase the premiums a little bit to cover their own risk. So quite often fully underwritten covers lower cost than non-fully underwritten or PEC products. And
so pre-existing conditions is one type of exclusion, and that fits to a certain part of the insurance sector, but obviously even in fully underwritten there are still exclusions. So what sort of exclusions should consumers be aware of when they're looking through PDSs?
Yeah, that's a great point as well, because when you are reviewing the PDS, it's more than just working out whether it's underwritten or not underwritten. There can be other exclusions, as you said, and they could be things like hobbies that people do. For instance, skydiving or even canyoning may be excluded from some products and not from others. And there might even be travel exclusions, but every PDS will have a list of exactly what those exclusions are.
So for consumers like Sarah who are about to go through a process of choosing a life insurer, it's obviously important to understand the existing conditions that are in there, whether they be the pre-existing condition exclusions or the ongoing exclusions around activities or travel. But obviously it's still important to read the entire document and make sure that you're comfortable with the product that you're buying. Which brings us to our next question from Max. So Max has been with a large insurer which, in his words, has been around forever. He's considering switching to a brand that he's not as familiar with, perhaps is new to the market, and wants to know what he needs to look out for. So Anthony, obviously we're in an environment here in Australia that's very well regulated, and APRA is heavily involved in life insurance. Can you tell us a bit about what that means for the consumer?
Absolutely, you're right. We're one of the most regulated markets in the world, and APRA is the body that really overlooks the insurers and the other financial services businesses. They have very stringent requirements around how much capital those businesses need to hold and compliance, how they need to comply with regulations to make sure claims can be paid out.
Okay, great. And so for those who don't know exactly what the structure of the industry generally looks like, can you tell us a little bit about reinsurers and sort of some of the brands that might be involved in that?
Sure. So a reinsurer is really an insurer of the insurer, which basically means the insurer is having another large global company backing their products and taking some of that risk just as a double security for their customers.
So that's great. So it means that consumers can generally be quite secure that the likelihood of the insurance company having cash for the claim is going to be there. But I guess having cash for the claim isn't the whole picture, because the difference in, say, some of the older, more established brands versus some of the newer ones is also going to be in the service around that claim and what they can offer consumers. So why don't you tell us a little bit about how that can differentiate?
Yeah, look, that's a great point, because that's probably the main differentiator. You want to know that when that time comes, you're going to be treated, or your family's going to be treated with great respect, the service is going to be there, and the claim's going to be paid. So it is important to do a bit of research on the service history of that insurer, and also do they have that real customer at their centre. There's different ways you can do that. Client testimonials is a great avenue. Often on insurers' websites or through Google, you can access testimonials from their clients to see, are they happy clients, are their claims being paid out. The claims history can often be sourced from the insurer's website as well. Do they had a history of paying out a large percentage of claims? There's obviously product comparison sites like a Canstar that reviews, both the product quality and service attributes. And there are other websites such as FIFO, where consumers can go in and rate the service that they've been provided from their insurer. They're just great ways to improve the confidence of that consumer.
So Max, I hope we've given you something to think about, and please keep us updated with your experiences. Chances are, if you're unsure about something, so are other people, and we want to help dispel any confusion within the world of finance. And remember, it's always good to have an understanding of the exclusions, benefits and limitations of your existing policy in order to be able to consider how an alternate policy compares, and fully understand the potential impact switching could have on your wider financial security and personal circumstances. Thanks for joining us, Anthony, and providing more insight on the life insurance industry.
Thank you, Josh.